We're looking at a sell-off today. What does this mean? Let's put it into context. The first thing that happens is traders who like to buy momentum, they get punished on a day like today. So I guess the first thing is, please don't buy higher highs. There's a better way, right? And the better way is waiting for an overall uptrend, which is what this structure is, green over green. That's bullish momentum, bullish trend. Wait for the green candle to hit the gray zone. We talk about this a lot. It just works, right? And that means you're buying at lows in terms of the range, or another way to look at the low is to consider it support. And within the context of the price movement, these lows in the daily price movement range are support. That's the low, right? Support, support, not a daily buy. I don't care if it's the index. I don't care if it's a stock. I don't care if it's a sector. Now you might say, well, Rog, isn't today a really good day to buy? Here's the problem. Powell is up next. So at 10 a.m. Eastern, tomorrow and Thursday, Jerome Powell is going to be doing his testimony to the Senate Banking Committee. And they're going to be grilling him on a myriad of things. Rates will come up. Rates, expectations for a rate cut is the key to follow through. If we are expecting Powell to wake up Wednesday morning and choose violence, then we know it's going to play out. Let me show you where, because we always want to measure this. It's going to play out on the target rate probabilities. This is the CME FedWatch tool. I love this tool from the Chicago Merc. Amazing tool. This is not about March. Rate cuts are not coming in March. Heck, this is really not even about May. Rate cuts are not coming in May, right? Let's take a look at June together. This particular month is the most important. And this column is the most important. This is the hold column. This is the 525 to 550 column. This is the quarter point cut column. For the equity markets to get a jolt, this column is going to have to go up. This column is going to have to go down. Now, if for whatever reason, Powell just wakes up in a great mood and says, you know what? Christmas in May. Okay. This column will go down. This is the 525 to 550 hold column. This column will go up. Presents for everybody, right? If he was really dovish, that would move expectations to May. I'm not expecting that, nor do we really need it. We just need Powell to stay steady about June cuts, the June 12 meeting, and we need to see the response in the data. And when I talk about data, this is actually a futures contract. We need the trades to align to that reality. This is so important. This is so important. So rate cut expectations, this is how we track it. We can do this tomorrow as soon as this testimony begins. So then that means we want to go to the strongest sectors and take advantage of the dip. Quarter to date, what we trade is more important than how we trade it. What over how, right? A lot of times, and I can appreciate this, a lot of times we get hung up on strategy and our secret squiggles. That's what I call indicators, including my own. We get caught up in strategy and indicators. What we really need to remember is what we trade is more important than how we trade it. So if we can focus on the strongest sectors and focus on the strongest stocks will be great. The only major sector, and by the way, what's a major sector? A major sector is something that I watch because it's heavily weighted within the indices. Now, XLP is a little bit of an exception, as is ITB, but ITB has Home Depot in it. XLB is a bit of an exception. So if you wanted to remove any of these, you could. You need to watch consumer staples, which is a defensive, or basic materials, or home builders. Look, you don't have to, but these could benefit from lower rates. But so if you want to clean this up, fewer secret squiggles here, take ITB, take XLP and XLB off the list. Everything else is weighted within the indices, right? Heavily weighted within the indices. Most of, quote unquote, the market, right? The indices, most of the market is up because the pieces of it at the sector level are all above the zero level. They're positive on the quarter. This is not what a bearish environment looks like, right? So again, let what you see dictate what you want to do. So when we get into the premium video, by the way, I'll get into a much deeper breakdown of everything, but let's just grab the top sector here. And since we talked about a lot of macro in this update, if you have any questions, feel free to leave them below here at the YouTube. But if I'm looking at SMH, this is the #1 weighted sector. What is not to like here? This is really simple. What don't I want to trade? Be careful with Intel. I would say these are the big cup of nope stocks. Nope, nope, and nope, right? I'm not saying they're bad, and I'm not saying they may not go higher, but the follow-through is going to be much better where we have the bullishness, right? The follow-through is going to be much better. SMH is absolutely on the radar. With Powell coming up, again, we don't know if he wakes up and chooses violence or not, but nonetheless, we want follow-through. We'll just use whatever volatility Powell creates to do that. All right, what about another sector? The second strongest sector quarter to date, I believe, is either XLC, and I know financials are up there. This is why the Dow and the S&P are as strong as they are. Really simple. Which stocks are the best to focus on? Berkshire, JP Morgan, Visa, right? Which are the ones that are no? SPGI is a no. I would leave Goldman alone. I would leave Morgan alone. I would leave Citi alone. Why? Because the strongest names are going to typically be outperformers. Look at JP Morgan, up, right? Look at MS, right? Look at Morgan, barely moving. Look at GS, down near the bottom of its range. Look at C, down near the bottom of its range. Look at JP Morgan, up near the high of its range. It's just going to typically behave better. Same thing with Wells. Not all of the green stocks did that, but most of them will. Work the probabilities. What we trade is more important than how we trade it. Tomorrow is Powell. Use the volatility of Powell, and then we'll get into more of the details of stocks like this that we want to focus when they pull back. All right, I'll see you in the next update. Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.